Alrighty, traders. This is Blake Morrow. You are listening to the Daily Roundup webinar. I hope everybody's having a good trading session. We've obviously we got a little bit of volatility today, which is good. Let's start off with the S&P and let's take a good look at this chart because, excuse me, I think it's actually a pretty important chart to what's happening at this moment. First and foremost, let me get rid of my drawing tool, or at least move that over a little bit. Okay, so what we're seeing, you know what, let me move that just a little bit. There we go. Okay, so what we're seeing here is a couple things. And first of all, we have a bear flag pattern, right? So let's just go ahead and clone that. Oops, shoot, not that one. Let's get rid of this too. We don't need this for now. Let's get this trend line, and so just so you can see where the flag goes, right? So the flag eventually takes us to 2770. That doesn't mean we're going to get there right now, or even in this session, but that's what it targets, as long, and for me, as long as we stay below here. So this is 2832. We're at 2815. I was just saying to the guys and gals in the chat room, if you're not in the chat room, I was saying that you know, any 20-point bounce in the S&P, I'm going to sell into strength now. So because I feel that this bear flag is playing out now, the rub here is the this 4-hour trend line that I think is fairly important. The reason why I think this is pretty important, and let me bring that down here. I think this is a neckline to a head and shoulder pattern, right? So basically, the reason why this is going to be so important is because this is a complex head and shoulder pattern, right? There's your head, there's your shoulder. Complex meaning it's cockeyed or diagonal, and it's diagonal. It's diagonal, so you can have a diagonal neckline. Now, I don't like playing head and shoulder patterns when they're like this, because then you have to really stretch to complete targets. But in this case, when it's tilted towards the right shoulder blade, then it's easier to play the head and shoulder pattern, which I think this is going to give you more of a longer term. When I say longer term, I should say the next couple of weeks kind of roadmap. And this would kind of go along with in the same lines of what I'd been talking about over the last few weeks, right? We're going to peak in May. We're going to sell off a little bit into summer, and then, you know, probably consolidate around the 2,500 range. And the direction from here in the summertime or later in the summer is going to be, what does the economy do following that the summer? And you know, one of the big catalysts, all right, one of the big catalysts into the summer, and think about this for a moment, it just really want you to take this into consideration. How long does the payment protection plan work, right? How long does that, how long do your unemployment claims go on for? A few months, right? So I think it's 3 months if I'm not mistaken. So that should take us into July. So into July, are we going to get another big stimulus kick, or are people just going to continue to stay unemployed and collecting unemployment for how long? You know what I mean? So as we go into summer, how the economy operates is probably going to drive prices from here, from these levels. And again, I'm just guessing that we're going to consolidate somewhere, you know, like there, or, you know, here, or something like that, right? That's been my thought process all along. I thought we might get up to the 200-day moving average in the S&P. It just you know, the failure to hit new highs obviously has left the door open for some downside. Okay, so with that being said, let's take a look at a couple of things that specifically that I'm looking at today. First and foremost is you know, a couple trades that I'm in is the Euro Aussie and Euro New Zealand. No, if you are in the chat room, you probably just heard that I, you know, took some of my trade off of the Euro Aussie up here. You know, the reason why is because we're not quite breaching those highs. We're at a 78% retracement. I'm like, okay, I'll take a little bit off, and I don't mind adding back down here, hopefully later tonight or tomorrow. Euro New Zealand, I took a little bit off because I think we're in a wedge. I'm trying to buy some as we dip back down into the 30s if we can get that, because I just took some off up in the 68, I think is where I took some off. And I'm playing these to the long side. I'm just, you know, trying to keep a core position and book some profits when I can, and, you know, buy it on dips when I can. So that's how I'm approaching those two particular trades. And if you were on the face webinar this morning, you probably have an idea of what I'm, you know, doing and how I'm treating those. Okay. Another big trade that I want you guys to pay attention to is this the euro sterling. The guys in my office hate it when I call it the euro pound, but it's the euro sterling, they like to call it. We have a possible range extension, this tight range, you know, and I mean, this is a big breakout if we can hold it. If we can hold above like 88.60, we're there right now. You know, we're basically at the breakout point. If we can hold this, it projects to 90.50. That's how far this. Let me make that a solid line. Okay, so this would be crap. I didn't want to do that. Okay, this is the range projection, right? And one of the reasons why I think that can happen is that if you look at the hourly, this is a false breakdown here, right? That was a false. You guys hear me say this all the time. False breakdowns usually lead to what? Breakouts. Okay, so I think this is trying to break out, and during periods of risk aversion, that's that you know, makes a lot of sense to me. So, you know, that the euro sterling would go up. It's just got a hold up here, and it's probably working off some intraday overbought signals, you know, which it was just, you know, over the last couple hours. It's gonna take a little bit of time, I think, to build some momentum here, but because it's already gone pretty far over the last couple of days. I mean, you can see it's gone from 87, low 87 pence level to 88.50. So, sorry, needs to work off a little bit of the overboughtness. But you can see the RSI is breaking out. You know, we should be able to extend out towards 80, 81, and the RSI maybe take us above 89 before really consolidating. I don't think this is going to happen tomorrow, but it's a pretty big move. But you can really see it in the cable, because the cable's breaking that head and shoulder pattern, right? Or that you can call it a wedge. This is very similar to what I see in the S&P, right? And don't ask me, is the pound leading the S&P, because I would say that doesn't work that way. But, you know, it might look something like that, double top, however you want to look at it. But I think that this wedge break should take us back down to like 120 in the cable. So for those of you that are short, you know, the pound, the cable, the sterling, whatever you are, that's, you know, looks like where we're going. Jane said also earnings again in July. You know, that's a good point. Yeah, I mean, you know, if you worked for a company and you filed for unemployment, and you know that unemployment only goes for a few months till like, yeah, what is that, July or so. So yeah, and how companies look after several months in a lockdown state. Yeah, it's gonna be interesting. It really is. Venkat says, "Hey Blake, can you check the S&P, please? Thanks." I did already, but I'll do it real quick for you again before we go. So I think we are at pretty good support here. I was looking at. Let's go with the hourly. I was looking at this, right? Something that looks like this. Yeah. Sorry. It looks like this, right? So you got a little trend line support that we're bouncing off, but as long as we stay below this 2830, let's call it, I think it's bearish. So, you know, are we getting a bounce? Yeah. And do I think it's a bounce we can sell into? Yes. Do I think this is a longer term head and shoulder pattern? I do. And so that head and shoulder pattern actually points to lower, you know, right? Over time. But we're going to, you know, there's going to be a lot of support on the way back down. Something to think about. Other than that, oh, Kiwi finally broke 60 cents, but this is channel support. So watch the Kiwi here. You know, I don't know if it's going to break right at this moment. I hope it eventually breaks down because that would take the Euro New Zealand higher. But I think that it's going to eventually break lower. All right. What else did I wanted to cover really quick? Gold. You know, since I've got you here, I was looking at this yesterday. This is another head and shoulder pattern that's been playing out. So, you know, the Dow's kind of underperformed the S&P, and you know, some of the big large cap names they are. So, you know, it's bearish. I mean, I think it's bearish, and so should continue to trade heavy here in the in the Dow. Again, any rally that we see in the Dow, let's see where we're at. 23,463. So I mean, we could theoretically have a 200-point rally in the Dow. I mean, we're down 400 points right now, so we could get a midday 200-point bounce back in the Dow from current levels, and it would still be, you know, running right into resistance that you'd probably want to sell into. All right. Okay. Diddler said, Didier, sorry. Can you talk about the New Zealand and the NSD and GER? I'm assuming you're talking about the NASDAQ and the DAX. I'm assuming. So, you know, this is a really interesting about the NASDAQ. We hit 161% extension of this last move here. But this is also a channel. I'm not following the NASDAQ as closely because it has been really kind of the outperformer. But there we go here. You know, we're finding some support there. But I think really key support for the NASDAQ is going to be down here at the 83.43. And then the DAX, which is trading heavier. The DAX is really probably the underperformer. I mean, if you really want to short indices, shorting European indices is probably the way to go. But this is another head and shoulder pattern. It has come out of a wedge, and we're breaking, you know, what would be maybe the neckline. You know, so this would be head, shoulder. This is a pretty common theme, and this is probably why you want to stay on the short side of these indices for the most part. You know what I mean? All right, guys and gals, I hope you have a great trading session. For those of you that are not ForexAnalytix subscribers, make sure you do so. It's only $1 for 10 days. That means you're listening to this after the fact. For those of you that are part of our community, thank you so much for your support. I appreciate it. The rest of the team appreciates it. And I hope you have a great remainder of your day. Thanks for tuning in. Bye-bye. Thanks, Brock.